Welcome to Epic Stock Due Diligence. Please subscribe at youtube.com/EpicStockDD. Thank you.
Hey everyone, welcome back to another exciting episode of Epic Stock Due Diligence. And that's youtube.com/EpicStockDD. For everyone that's not already familiar with Epic Stock Due Diligence, we've got a lot of videos, entertaining videos pertaining to the stock market. So if you're not already a subscriber, I encourage you to do so. Obviously, as I say with all my videos, they're for entertainment purposes only and should not be considered a recommendation to buy or sell security. I share all my videos for fun only. And with that being said, what I want to talk about today is an entertaining topic called Level 2, also known as L2. Now what L2 is, it's also referred to as market depth, but the best way to visualize it, and if you're a seasoned stock guru, you can laugh at my explanation, or maybe you'll appreciate the simplicity of it. But the best way to understand L2 is that you've got a fence in the middle. One side you've got the bid, the other side of the fence you've got the ask. So if you're a trader and you're adding stock, maybe you already own some of it, maybe you're adding more, maybe you don't own any. When you purchase that stock, that order is going to execute at the ask price. Now if you're letting go of stock that you already own, then that order would go in at the bid price. So it's important to remember, because often, especially with penny stocks, not so much as the big boards, because usually when you're dealing with big board stocks, they have what's referred to as a tight bid-ask spread, meaning that the bid and the ask may be within a few cents of each other. But with pennies, especially lightly traded penny stocks, you may encounter a penny stock that on the ask, let's just say hypothetically, is 0009, so .0009, but on the bid it's .0005. So immediately, if someone added that at 0009 and immediately tried to exit, they would be the bid being 0005, they would immediately be incurring a significant loss. Now what Level 2 does for an active trader, it allows people to not only see the bid and the ask side of the fence, but it enables people to see all of what are referred to as market makers, also abbreviated MPID, these various symbols that represent financial institutions. So when you've got market depth, and depending upon the popularity of the stock, it may have a few market makers on it. It may have an abundance of market makers on it. But you can look, L2 provides, like it says, market depth. It provides more insight as to where a stock may be heading. And this is all hypothetical, again, for entertainment purposes only, and should not be considered a recommendation to buy or sell security. But when you're looking at Level 2, let's look at a stock that's 1 cent, 1 penny on the ask, and the bid is .009. So the bid's getting somewhat close to the ask, but not right there. Now if you look at the ask, you will see in Level 2, it's the share quantity. So each market maker lists a quantity of shares. So for example, at the ask, if it had 20 million shares at a penny, and then the bid, and keep in mind when I say 20 million, one market maker may have 1 million, one market maker may have 5, whatever the case may be, to add up to 20 million at 1 cent. And then on the bid, you may have all the market makers, let's just say 5 market makers, but you only have a bid size of, let's say, 10,000 shares. So in that scenario, and again, none of this is written in stone, because stocks are unpredictable and anything can happen. But when you see a scenario like that, with such a small share quantity on the bid versus such a large share quantity on the ask, it makes one wonder, well, is this stock doomed? Because for this thing to uptick, there's going to have to be in excess of 20 million trades at the ask to get it to uptick. And if people are letting go at the bid, let's think about how rapidly this thing could fall. Because taking out that 10,000 share bid won't take hardly anything. And typically, the ask will follow the bid. So let's just say, looking at that, that was 1 penny on the ask and .009 on the bid. Let's say that people were letting go of their position at the bid. So there's a ton of people that let go. The bid, let's say it downticks to .005. Well, the ask is going to follow. So the bid being .005, the ask may now be .0055. I mean, this is all hypothetical. But in that type scenario, it would be perceived as a risky move to get in because there's such that large share quantity that people have to chew through on the ask to enable the stock to uptick. So the most probable outcome is probably it's going to go down in price, and the ask is probably going to follow. Now, looking at it from another perspective, and this will be a scenario where people would say, "Oh man, that's good bid support." Let's just say hypothetically, a stock is at, let's just use the same prices, so it's .009 on the bid and .01 on the ask. Well, let's say that .009 bid, there's 30 million shares, and let's say on that ask, there's let's just say 1 million shares. In that scenario, there's a heightened probability that the stock may increase in value because it's only going to take 1 million shares traded to break through that 1 penny, and then in that scenario, the stock should uptick. So it goes from a cent to let's just say maybe it goes to 1.50 pennies or something. Whatever the next, and that's the other thing I want to talk about with level 2, is that you can see for both downticks and upticks where the next stop will likely be. So when the ask was .01 and the bid was .009, when you looked at the bid, below that .009, the market makers at that, you may see a market maker at .0075. And likewise on the ask, you may see a market maker, it's going to be the opposite on the ask, so you know, .01, a penny was on the ask, so then the next market maker may be 1.50 pennies. So it's just a good way to know where stock may be heading. Now, you can get more, this is a high-level summary of level 2. If you become more in-depth with market depth, you'll start to learn more tricks. You'll start to see how the market makers throughout a trading session often mask their shares, and they can do that both on the ask and the bid. Typically, a good visualization of that would be you were seeing on the ask, you were seeing share quantity of 20 million, and all of a sudden it goes down to 10,000. But if you're looking at the time and sales information on level 2, which will show each individual trade, you might notice that the transactions at the ask have greatly exceeded that 10,000 that's posted. And in a scenario such as that, it's often the market makers trying to mask how many shares they're actually after. So it's a really challenging and entertaining game. But like I said, the best thing and again, this is for entertainment purposes only, should not be considered a recommendation to buy or sell security. But what I always suggest is going out and looking at the big boards because there's less volatility, and then looking at the penny stocks because the penny stocks, I mean, the volatility is what creates the heightened probability of both loss and gains, and it's significant either way. So anyway, hope you enjoyed this video. Stay tuned for more videos. Got live shows coming up. youtube.com/EpicStockDD, and check out my book if you want to. It's available in the Apple iTunes Store. It's entitled The Penny Stock Perfectionist, and you can find a link to that book within the main page of youtube.com/EpicStockDD. You can see my picture there. I'm in front of the Bull on Broadway, and then down below it says buy my book. So check it out. Y'all have a good day.